Hi, dreamers. This is going to be another freestyle one where I just kind of record what I'm thinking about right now. And today we've had another doozy where my account has dropped another $11,000 just in the first few minutes of the market open. And you can see down here the Dow is down 200 points, NASDAQ down 50, etc. Gosh, I mean, we've been doing this for at least a year now. It's kind of like, when are we going to hit that recession? And how do you stay motivated throughout this whole time frame? And so this morning I was researching an article on Mo Altria. And yes, believe it or not, I do continue to do research on my biggest positions, even though they're long-term holds. And of course I go to Seeking Alpha, which is my favorite research platform. And in this particular article, it talks about that the recession of 2023 is literally the most anticipated in history. And that it's not only amongst economists, which I'll show you a little bit more in a second, but almost all CEOs expecting a mild recession this year, 80% of Americans, the bond market is 100% certain that there's one coming in the next 18 months. And the Fed is expecting a mild recession and still hiking those rates. And then it shows these lovely warning clocks, which is pretty much panic-inducing. The Yellen debt default warning, which is like 20-ish days away, and then the Goldman's U.S. debt default estimate. So when you look into this, and this source is the Federal Reserve Bank of New York, you can see what the U.S. recession probability has been peaking in August of 2020, and they are actually predicting that a recession would happen in the spring of next year, which is kind of interesting. And so, of course, I'm looking at other sources as well, and this is the Conference Board. And, this does not look good. I also go to this article in Forbes, which basically says Goldman just increased their probability to 35% of recession in the next 12 months, brought on by the stress of small banks, the continued increase in Fed hikes, etc., etc., etc. Ugh. And I don't know about you guys, but I've actually seen quite a few of my friends starting to be laid off all around different industries. And so that is a pretty big indicator to me that what I'm reading in articles is actually starting to play out in real life. So one question I get quite a bit is, how do you stay motivated during this whole time frame? Because it's super hard to just continue to pour money into the market and continue to invest as you watch your portfolio just go down and down and down and down. And I just want to reiterate something here. From my spreadsheet that I went over in the last portfolio update just about a month ago, that when you look at my top positions, BCE, Mo, BTI, even these, IBM, O, PM, T, I mean, you guys, do you realize what a huge defensive position I'm crouching in? And the next one now is JEPQ? That is a hedge, you guys, because it's protecting principal on the downside through those equity-linked notes. Overall, I do not want to be in such a defensive position. This position that I've been in the past essentially 2 years is way more defensive than I'd prefer to be. But the reason why I'm overweight in this way is because I believe, for the most part, my top positions are less likely to fall as hard as the rest of the market has done. And you can see I've actually added another row down here just for comparison purposes. In February of 2022, I had about $1.5 million. And in September of 2022, that had gone to its pretty much lowest level of 1.3. And now we're sort of back up to that 1.5-ish level. And so I'm pretty proud of the fact that over this time frame and even before that I have not lost money. I've essentially stayed the same in terms of current value. But here's how I stay motivated and how I think everybody can start to stay motivated as we go through potentially a much longer sideways movement over the next 12 to 18 months. Take a look at the quantity of shares that I have. Now, you've watched me optimize and move things around, yes. And so, of course, that affects quantity of shares. But I've also kept my core positions pretty steady. And you can see that I had a total of 25,000 shares back in February of last year, which grew to 33,000 shares in the fall of 2022, and is now 38,000 shares plus in the spring of 2023. And so one way you can stay motivated is by looking at your quantity of shares and knowing that that's a good way to think about your portfolio and the size of it, not necessarily the current value of those shares. So one way to stay motivated is just by what's the number of shares? Another way to stay motivated, of course, is by your dividend income. And you can see here, I had $70,000 Patty as of February last year, which grew to the low 80s in the fall of last year, and is now that 95,000 plus number in the spring of this year. And so that's another way for you to stay motivated in this down and sideways market, is just by the knowledge that you are buying these shares at a discount, and that these shares are going to rise in value as soon as we are out of this next phase, and certainly for the long term. And another thing that can keep you motivated along the way is monitoring dividend raises. I always find that very motivating as you go throughout the quarters and the year and watch as you hold stocks that receive annual dividend raises, potentially even more than what you get at your job. And one place that you can actually monitor that is inside of Fidelity, in the dividend view, looking at this column, the amount per share. And after an announcement is made in the press, you can actually watch as one of these numbers goes up. And let me tell you, it's pretty gratifying as you look across this column over time and you see the amount you are going to get paid per share go up every single year, which gets me back to this number. Because if you just focus on the number of shares you hold and the amount per share that you are getting paid, then the day-to-day, week-to-week, month-to-month, and even quarter-to-quarter total current value as valued by the market won't affect you as much. Because of course, right? You're a long-term investor as a dividend investor going for the end state, which is a permanent paycheck based on this investment portfolio. Right, my investor? Okay. Well, that's all I wanted to communicate for today, is just stay the course. Don't let fear take you off of that course. And there's so many ways to stay motivated and interested as we go through this next 12 to 18 months, which I think and have always thought would be a very sideways market. And I'll tell you what, I personally can't wait to shift gears and go back into aggressive mode and dividend growth mode, but the time is not yet. And I'll let you know when I start to shift that gear. Well, that's it for today. Feel free to follow me on Instagram or Twitter for a more real-time daily update. Thanks for spending time with me today. And as always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I am not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.